Larry, it's good to have you here. Welcome.
It's great to be on. Wish it could be in person.
Us too. And listen, you were so ahead of this, Larry. If people had listened to you, we might have been able to prevent this from being as deep and as bad as it is right now. So, look, as you pointed out, Hong Kong was giving people $1,000 checks weeks ago. Why is the U.S. dragging its feet here? What can be done quickly at this point to prevent a worse hit to the economy, more people out of work than is necessary?
Well, I think we are going to have people out of work, and there's probably not a lot that can be done about that. When you have social distancing, then you're going to see a big drop in the number of people, say, being hired. You don't even have to have mass layoffs. A little less than 6 million people leave their jobs in any given month, 2/3 by their choice, 1/3 by their employer's choice. And a lot of those slots aren't going to be filled. So we're probably going to have a big drop in employment. My guess is that it's going to be in April. There may be some of that in March. So there is going to be a downturn for sure.
Right. So I think we're talking about, we could get a jobs report that shows a huge decline of jobs. But you're saying it's not so much because people are getting laid off right now. It's because they're not getting hired. How long do you now anticipate this to drag on? Do you think more people will end up getting laid off because there's not enough? Sure, the Fed is acting quickly, but it's not clear that's going to do much. I mean, there's not enough yet from the federal government side, is there?
No, there's not at all. You had Scott Gottlieb on earlier this morning, and my views are with him on this. He said we're probably going to see peak in cases at the end of April, and so we'll be coming down on the other side of the curve in May. That's pretty good news. It means you won't quite have an all clear by Memorial Day, but by far the worst will be over. So we are going to have a big hole in the second quarter. There's no question about it. Our estimate is that you're going to see a minus 5% print in terms of GDP for the second quarter, that's a whopper of a hit. The problem and the challenge we have is twofold. One is to make sure that people, who need it get cash, but more importantly, that those businesses that get hit hard have enough cash to reopen their doors. Mm-hmm. You could have what is sort of an inevitable 1 quarter or 2 month decline turn into something more extended where we don't come back.
Exactly. Because
a lot of businesses simply don't have the cash to operate. And I think that's what's been neglected. It was certainly neglected in the House bill, and I wish that is what happened. I think administratively, the easiest way to have done that would have been a payroll tax holiday because it shows up immediately in the small business cash flow. But so far, that hasn't happened.
Right. No. So we have an unemployment rate of 3.5% right now. You think it goes over 5%?
It could go over 5%. Right now, my guess would be 4.5%, but it certainly could hit 5%. But if we come back and reopen and a lot of businesses don't fail, that number is going to come right back down again.
Sure. Yeah.
Remember, the biggest challenge that businesses had up until like 3 weeks ago was finding qualified workers. So certainly the demand is there for the workers. As long as the businesses, and particularly the small businesses who don't have capital, are able to reopen, that's key. And we have to find a way of getting money to small businesses and not just individuals, although the individuals are important.
Absolutely. So, Larry, because we're going to run out of time, let me ask you this. So your ideal, you'd say, look, you can quickly get money to small businesses by doing an employer-side payroll tax cut. Why not do an employee-side tax cut, too? And I know at this point we're talking about $1 or $2, maybe $1 trillion worth of action here. Are you concerned about, what that means for debt deficit and all that in the long run, or no? I mean, kind of walk us through how much this would cost and what that does to the U.S. in terms of any harm you're worried about, if you even are.
Sure. A 1 quarter payroll tax holiday. So you don't pay payroll taxes, either employer or employee, for 3 months, is a net cost to the Treasury of about $300 billion. So that's rather small comparison to the 1 to 2 trillion people are talking about.
Because that would be for the year.
Now, at this point, you're probably going to have to do more than that. If you'd done that 2 weeks ago, I think we would have had enough reassurance in the market. We wouldn't be needing to do more. But certainly it is administratively the quickest way because it's immediate it's just a matter of changing your the size of the check you send to Uncle Sam, right? You can reduce it, and your payroll company can, click 3 keys on a keyboard, and there it goes. It's all set. So that by far is the quickest and most targeted way of having it happen. I think we're going to have to do that, plus something broader, given that we're acting on this all rather late. Why didn't it happen? It didn't happen, I'm afraid to say, because of politics.
Sure.
And remember, even travel bans were called racist back in January. And then we had impeachment, and then we had primaries. And I think the political system is just now waking up to just how bad the economic threat is.
Well, and hopefully they will take heed of what you're saying.